In today's video, I want to touch on Meta platform, one of my largest holdings in the core portfolio. It's actually number 3. I want to touch on the current state of the company, the stock, and then later in this video, I do want to touch a little bit on the Google DOJ fight, selling out of Chrome or potentially selling out of Chrome, and maybe even Android. So that will be in the back half of this video. So currently Meta platform is back above $600 per share. It did dip a little bit under $600 a week or so ago. Market cap wise, $1.51 trillion. As you can see over the last 5 years, yes, at one point, remember when everybody was extremely bearish on Meta, right? Who uses Facebook? Who uses Meta? Metaverse, they're going down, etc., etc. They had a drawdown of close to 80%. Incredible. Now, since the lows, the stock is up 600%. Now, you can go back to November of 2022 and check one of the videos I made on Meta. Probably not a lot of people saw that video, but I was extremely bullish, and that's one of the main reasons why Meta is now number 3 in the core portfolio. Now, looking at valuation, trailing 12 months PE, 25 times, forward PE, 23.5 times. So not much of a difference. Definitely not the most expensive name out there. Not the cheapest one either. I mean, Google, we know, is cheaper than that, but still a very good company trading at quite a reasonable price. If we look at the growth, the compound annual growth rate, if you look at revenue forward 2 years, 14.2%, EPS 10.5%, has a free cash flow margin of 32.9%. Now, before continuing, if you enjoy these type of videos, hit all the buttons. Would really appreciate that, especially the subscribe one. We're closing in on 90,000 subscribers, so hit that red button. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so currently the average analyst price target sits 24.4% higher than the price we're at today. Looking at the forward PE and especially compare that to the 5-year mean, it's a bit higher than that. But you have to take 2 things into consideration. One, the huge jump here back in 2022, and then the big crash at the end of 2022. And the same goes for EV to EBIT and price to free cash flow. It's a bit higher than the 5-year mean, but here as well you had 2 huge fluctuations in that same time period. Now, what's going to happen when we look at free cash flow in the next coming fiscal years? Well, actually in fiscal 2025, free cash flow is expected to decrease 19.3%, but then we see a solid reacceleration of 25.4% and then another 36.5% year-over-year growth in fiscal 2027. Looking at, well, family of apps revenue, Reality Labs, family of apps revenue, actually you can see a nice rebound here year-over-year after it, well, dumped. It basically dropped 1% here in 2022. Horrible year. But since then, we've had a nice little rebound. Of course, Reality Labs revenue, well, it's not much. Same for operating income. That is a money-losing machine. Whereas the other side of Meta, that's a money-making machine. And I mean, when you look at this, right, this was basically the bottom here, 34%. If you look at family of apps operating margin, 34%. And since then, well, 40, 41, 52, 54, a little bit down here, 49, 50. And then last quarter, 60% operating margins for family of apps. I mean, truly an amazing business. And yeah, for those that did buy that huge dip crash at the end of 2022, I think you are quite happy. Now, where do they generate the majority of their revenue? Comes at no surprise, United States and Canada. Then we've got Asia Pacific region, Europe, and then rest of the world. Of course, when you look at ARPU in the United States is the highest, then you've got Europe, and then you've got Asia Pacific and the rest of the world. And you can look at it this way as well. They show us family average revenue per person. The year-over-year increases here. Last quarter, that increased 15.6%. Since the March quarter of 2022, family average revenue per person did increase by 48.9%, or grew at a compound annual growth rate of 15.5%. Now with Meta, if we look at total employees, of course, we know that 2022, that was the peak. Then there were huge layoffs. So if we look at revenue per employee, that grew by 32.5%, or at a compound annual growth rate of 5.8%, much slower than the total employee count, which again makes sense a little bit, although we did see a nice acceleration in growth since that bottom here in 2022. They are becoming a, well, better company. They're basically doing much more with less, and I think that's going to continue. And you can actually see this right here, right? CapEx has increased quite a lot. Of course, here in 2022, if your core business is struggling, you have lots of changes, and you then increase CapEx by quite a lot, free cash flow gets hit. But look at what has happened afterwards. CapEx was still huge, and increasing actually, and yet free cash flow is at record high because this company is becoming bigger, better, leaner, more profitable. And I think we're going to see that continue for many years to come. Now, if we do a quick reverse DCF here, plugging the trailing 12 months free cash flow, we know that in fiscal 25, that's going to drop, but you have to take the trailing 12 months, put here the necessary numbers. We can see that to justify today's price, it will have to grow free cash flow each and every year for the next 10 years by 8.4%. Now, as we've seen, after the drop in fiscal 25, it is going to grow quite faster than that in fiscal 26 and in fiscal 27. Now, of course, those are just 2 extra years. We have to look out for what's going to happen the next 7 years after that. And let's be honest, even if we plug in 10% or so, 10% would mean that we should be 13.6% higher than the price we're at right now based on the information that we have today, the numbers that we plugged in here today. So yeah, I still think that Meta today makes a lot of sense. If we have a quick look at the stock, when the stock did drop under $600, it dropped a little bit under that 200-day moving average, quickly rebounded above that, and now we're going to challenge the 20-day moving average. So yeah, out of the Magnificent 7, I would say this is, I think, one of the only ones that did rebound above that 200-day moving average. Now, of course, with Meta for the next coming years, they're investing quite a lot in Meta AI, Llama, building our data center infrastructure, and especially VR and AR. Yes, that's still going to be of extreme importance in the future because they've been spending quite a lot of money on that. Let's be honest. I mean, Reality Labs, prediction here, will they ever be profitable, right? Will they ever recoup all of the billions of dollars that they've burned throughout the last couple of years? That's a good question, right? Good question. And even on Meta AI and Llama, open source, like how are you going to monetize that? Of course, they're monetizing AI through the advertising side of things, which as we've seen is extremely profitable. But what's going to happen in the future? Are they really going to go into robotics and into other stuff? Remains to be seen. But yeah, buying Meta today is definitely not buying Meta just because of the social media platform. It's buying Meta as one of the most powerful AI players on Earth, believe it or not. Pretty impressive, to be honest, the change that happened in the last 2.5 years or so. Moving on to Google. So Google must divest the Chrome browser according to the Department of Justice. They renewed their call for Google to sell Chrome, and Android could be next. So in a court filing published on March 7, the DOJ doubled down on its assertion that Google's dominance in search is the result of the monopolistic practices that have been leveraged to support other services such as Chrome and Android in a way that makes fair competition nearly impossible. The revised proposal final judgment lays out the stakes, stating the American people's reliance on Google's search engine is well known. Less understood, however, is how Google, through its unlawful and unchecked monopolistic conduct over the past decade, secured the American people's reliance. Google's anti-competitive conduct has denied users of a basic American value, the ability to choose in the marketplace. Like I said before, this is the worst time to go after Google because of their search dominance. The worst time. They continued. Additionally, the court filing calls for a provision for Google to divest Android and includes measures to prohibit Google from making exclusionary third-party agreements in which Google pays partners to be the default search engine on their devices and services. To be honest, that part, okay, let's do it. It's going to be a small win for Google not to be paying $20 billion plus to the likes of Samsung and Apple. It's going to be a big loss for Samsung and Apple because it's essentially money that flows to their bottom line. That's going to be essentially money that Google keeps in-house. And I can be quite certain that the majority of people that use Chrome will be using Chrome of those devices, even if that's not the default search engine. That's just my prediction here. Moving on. All of that effectively means Google may be forced to sell off Chrome, potentially sell Android, and end agreements with third parties in which Google pays to be the default search engine. The court filing even suggests the judge should require Google to share data to offset the scale disadvantage that its unlawful conduct has created. I mean, what is this overreach here? Is this the CCP or is this Department of Justice in America? This, in my opinion, does not make any sense. They've built their competitive advantage. Why should they now give it away for free and also sell one of the most important services to an unknown source? Like, I use Android, I use Chrome, I use it. I think it's one of the best things out there, probably the best since that's one of the main reasons why I use it. I don't want another random company to own it, to have my data, to have my passwords, to make sure that my experience stays the best. I want Google to own that. It doesn't make any sense to me. Google here answered, they've repeatedly pleaded for the DOJ to back off, calling the DOJ's proposals a radical interventionist agenda. But it doesn't look like that's going to happen now, especially with hearings set to kick off in April, which is pretty soon. The judge will have the final say in whether Google has to sell Chrome and potentially even Android. But this is shaping up to be a landmark antitrust case, the likes of which we haven't seen since the litigation against Microsoft in 1998. During the Biden administration, the DOJ had previously claimed Google had corrupted legitimate competition in the ad tech industry by engaging in systematic campaign to seize control. A seismic ruling soon followed in August with a federal judge finding that the company had illegally monopolized search and related advertising. Google's vice president didn't like the ruling one bit. Quote, "The government putting its thumbs on the scale in these ways would harm consumers, developers, and American technological leadership at precisely the moment it is most needed." End quote. With news of the DOJ's proposed far-reaching remedies then surfaced in November, Google and Alphabet's president of global affairs and chief legal officer said the following in a blog post: "The DOJ chose to push the radical interventionist agenda that would harm Americans and America's global technology leadership. DOJ's willingly overbroad proposal goes miles beyond the court's decision. It would break a range of Google products, even beyond search, that people love and find helpful in their everyday lives." And I mean, of course, they're going to be quite aggressive right now with their response, but it makes sense. I mean, imagine you go to another company, an Apple, for example, and you say, "Oh no, actually, you have to sell off Safari." I don't know how many people use Safari, but okay, you have to sell off Safari. Even worse, App Store. Imagine they say, "Actually, no, App Store, it's a monopoly. You have to sell it." It wouldn't make any sense. It wouldn't make any sense, right? Apple controls the App Store because, well, that's what they say. That's also why they're charging 30% on everything that happens there. But you cannot sideload. You used to be able to jailbreak. Doesn't happen anymore. But it's for the consumer safety. It's to make sure that the experience stays the best. It's to make sure that nobody can really download malware or whatnot that would destroy your iPhone or take control of your precious information. Now, Android is a bit more open, not that much more open, but a bit more open. There are ways where you can sideload and download things on the site. It just doesn't make any sense to me. Like, they can try. I think this is going to be something that will last for a long time. I see no reason why Google should be selling Chrome or even Android. And like I said, it is the worst time to go after Google for its search dominance, right? Because why is Google under pressure from a Wall Street perspective? It's under pressure because of all of the advancements in AI, all of the LLM, all of the ChatGPTs, the Groks, the Perplexity, Claude, etc., etc. They're putting Google search under pressure, right? That's what the headlines say. So how can you play both sides here? It just doesn't make any sense to me. And to be honest, as always, it's going to be a worse experience for the consumer. So, yeah, my opinion, I don't think they will be forced to sell Chrome or Android. Maybe they'll pay a fine, maybe they'll tweak some little things here. The third-party stuff for Apple and Samsung, you know what? If that happens, good. I think Apple and Samsung will get hurt way more than a Google. We'll have to see. What happens. Do share your thoughts down in the comment section below. Like, subscribe, do all of that, and I see you all in the next one. Bye-bye.